It's going to be a busy Wednesday. The star yesterday was Zomato. What a surge, good volumes, nothing new. City report talks about a target of 70 rupees. Hemang Jani, what has turned for Zomato suddenly? Everybody is talking about it. 3 months ago, nobody wanted to buy it. Everybody wanted to discard the stock.
Yeah, good morning, Nikunj. So clearly, when we look at some of these exotic platform or startup companies, at one point there was a lot of exuberance, and then we had a massive loss of market cap. And now, in the past, let's say about a couple of months, we're seeing the interest, come back. I think the biggest, factor which has contributed to this is that. The sense that after seeing such a big drop in the market cap, the operational numbers or the GMVs and many other parameters that one tracks, there is definitely a sense of improvement. And having reached a certain numbers in terms of users, etc., the sense one is getting is that at some point these companies will start reporting better profitability, which was a key overhang. And I think for a market like India, Nikunj, the fact remains that, for many of these things, whether it's food delivery or fintech, etc., we are at a nascent stage and there is a long runway of growth. So it was a matter of whether the profitability and the valuation, whatever was the gap, whether at some point it will balance out. And now we do strongly feel that for companies like Zomato and PTM both, for those who have a slightly high risk appetite, I think the risk reward is looking quite compelling. And we too have initiated coverage both on Zomato and Paytm, and we are looking at a 30% kind of an upside.
Okay, so that's the take coming in as far as some of these new age tech companies are concerned. But Hemang, what's your take as far as Cement Pack is concerned? The first company from the Cement Pack reported numbers, Dalmia Bharat, and it was rather disappointing because the operational cost went up. The EBITDA per ton was a big miss versus expectations, though the volumes were okay. Do you think whatever the street was penciling in with respect to margin improvement will get derated now?
I think, Anisha, in case of cement companies, this quarter may be a little subdued or okayish, but I think given the way things have panned out, both in terms of the overall, visibility because of the, kind of pickup that we are seeing from the government side, real estate, and the fact that the raw material prices have cooled off. So I think you would see incrementally positive, data points in terms of earnings. I think the price hike is something that people would really want to focus upon now. And if you see even a small price hike, there is going to be a lot of positive traction across cement packs. We've been liking Ultratech, we've been liking JK Cement, and some of the south-based companies like Ramco. I think we should have a positive bias from a medium-term perspective for cement companies.
Meantime, Hemang, let's talk about Ipca Laboratories in greater detail. After the Unichem acquisition, analysts have clearly touted this as expensive valuations, a pretty challenging deal. What's your take?
So, Avan, I think given the way this entire acquisition has panned out, there is a strong sense that there is a case of, misutilization of the capital or misallocation of capital allocation, because already the company is struggling in terms of their, import alert related issues. And on top of that, they've gone ahead and acquired a company where, the return ratios are extremely low and there's a high gestation period. It raises the doubts in terms of the corporate governance. So we think that in the current scenario, the overall sentiment towards Ipca would remain, negative, and it would make more sense to go with, some of the other companies in the pharma space, whether it's Sun or Cipla, to some extent, something like Ajanta Pharma or Alchem Lab, rather than, buying Ipca because it is corrected.
Well, what did yesterday very well? RITES, railways. Look at Titagar. 130 same time last year has become 330. RIT, Rail Vikas Nigam. You just look at some of these stocks. They're really making a comeback. First it was defense, then it was railways, and now it is defense and railways both. Hemang Jani, stocks are more and capital is less. That's the answer which I get when we speak to our viewers. That bhai ek batao. Which is the best one to buy according to you?
I think, Nikunj, railway stocks surely are making a strong comeback. And I think because of the way the government has gone about reviving that entire sector with a lot of capital infusion, aggressive rollouts, there is going to be a good amount of traction. So I think, BEML is something that, we could look at, because that's a company which has a very small equity, also has a presence across railway, defense, and many other interesting sectors. And strategic divestment could actually re-rate the company in a big way. So I think BEML is something that one can look at. Apart from the defense names like HAL, BEL, Bharat Dynamics, I think some exposure is surely making sense, because typically this theme looks like it will go on for at least 2-3 years.
Okay.
Something that a lot of the companies as well have been alluding to, the managements who we speak with. Few deals there, few and far between. But yeah, like you said, the funding has certainly dried up, Nikunj.
Hemang Jani, come in.
Yeah, Nikunj, I really like some of the points you covered. Just one quick comment over there is that when you said that one smart investor is selling to another smart investor, I think who eventually turns out to be smarter, that will be discovered only later. When we get to see how the company shapes up. But yeah, I agree with you. But Nikunj, I think we have moved on from that phase. I think the phase is where you are seeing a significant correction in the certain companies, and now you are seeing a little better numbers and little bit of clarity on profitability. So I think now the appetite if the interest rates also come down coincidentally, you will see some interest coming back into some of these companies, because the fact of the matter is that it's not as if that these companies are going to have a tough time for an extended period. I think at some point 2 or 3 companies will emerge much bigger with a very solid profitability. So I think overall we should be looking out for opportunities at this point of time.
Hemang, I also wanted your take regarding ITC. That's sitting at record high levels, and now we have the read-through coming in from VST Industries number, wherein they reported a weak set of numbers, but now analysts are saying that perhaps ITC has managed to gain the market share, and that's likely to see a lot of volume ramp up as compared to its peers. Your take on ITC?
I think the best performing stock on Nifty, even at this point, it is still quoting at about 28, 29 times forward PE multiple. Solid performance across divisions. Of course, tobacco is doing pretty well, but hotel, the cardboard business, I think this is the best time for ITC, and it looks like that this will continue. So we shouldn't really be thinking that, okay, ITC has run its course and now, it's time to move out, because still it is much cheaper. The businesses are doing pretty well. There is a momentum. So if one is holding on to ITC, surely he should hold on to it. And for traders, when the stock is near, high levels, it gives you some more opportunities to, play upside with this kind of a momentum. So we continue to have a positive bias on ITC.
Okay, there you have it. Meantime, let's also get in a take as to, Hemang, what you're penciling in from auto. In particular, what the expectation is from Maruti today. Brokerages clearly have given a thumbs up to Bajaj Auto's earnings. What else do you like within the auto space? And if you could comment on these numbers.
So Bajaj Auto clearly was a beat, and I think you will see some more upside. There are earning upgrades that one is really looking at for Bajaj Auto. Maruti had its own challenges in terms of stock price movement, but I think at this price point, given the overall growth one is really looking at for this year, should do well. And we do think that the way the company has re-energized in terms of product launches and the compact SUV, I think it stands out. So we continue to have a positive bias on Maruti, and maybe something like a Ashok Leyland, which is a pure play CV. So I think these are some of the names where we have a positive view. And auto as a sector, we still think that even this year on a relatively higher base will deliver very strong earnings growth.
A lot of mid-cap stocks have done rather well. And one mid-cap stock which just caught my attention yesterday was Max Ventures. First, the deal happened in DLF. Then came the big surprise from Lodha, Macrotech developers. And now Max Ventures is up 40%. Anything which has got to do with real estate, prefix or suffix real estate, that's doing rather well. So Hemang, if real estate is doing well, that means home furnishing will do well. That means bathroom fitting will do well. That means kitchen appliances will do well. Is the cycle reversing? If you buy a house, you want to buy a bed, you would put fixtures in your bedroom, you would buy candle, you will not buy candle lights, but you will buy tube lights. Is that cycle reversing?
So Nikunj, when we look at the hard data, what is coming out very clearly is that some of the specific categories are doing well. So maybe plywood and the furnishing related sectors are doing well. But when you look at the lighting, and the entire ecosystem around that, that is not doing so well. So I think, as a theme, definitely because of the way the real estate numbers are showing up, you will have some maybe tiles companies do well, some of the plywood companies do well. But it will not be a very similar kind of a thing when it comes to air conditioners or consumer electronics, etc. So we think that one can definitely look at Century Ply or Kajaria, which will benefit from this entire up move that we are seeing in the real estate.